All right. Very good morning to each and every one of us. I want to appreciate all the 300 plus of us that have joined into today's sensitization. I would like to confirm that you can hear me clearly. Please just show me by a show of hands. Thank you. Thank you very much. Just allow me to just bring some order here because I can hear some noises in the background. So yes, yeah, that is much. Thank you, Paul, accountant. I don't see a name there, but yes, Patience Lumumba. Thank you. I see that. Eunice Anyakio, I see you. Thank you so much. Teresia Wamboi, thank you so much. I see the likes of Samuel Kamba here with us. I thank you, Paul. Eunice, Galaxy A50. That is the name that I see on the screen. Thank you so much. Now, please confirm the quality of my audio, that you're actually able to hear me clearly. You can just comment on the chat box that my audio is clear. Pinas, I see you. Thank you so much. Grace, all clear. Thank you very, very much. Kindly just share our link to your friends, to your colleagues. I want to confirm that we are also live on our various social. Our social media team will just post for me the chat box, post it on the chat box. They will just post it on the chat box just now. And you can share. Peter Wick, thank you very much. Martin, thank you. Daniel is saying you can hear me loud and clear. Fantastic. It's a beautiful morning, though it's a bit cold in Nairobi. I don't know about the other parts of the country. You maybe in the chat box, you can tell us where you're joining us from. Where are you from? Is it as cold? Is it raining where you are, Steven? Thank you for the thumbs up. Appreciated. Victor, clear. Thank you. Thank you so much. Asha is saying all the way from Mombasa. Mombasa kukoje? Kuna baridi ama kuna joto? Thank you so much. Riungu Anthony, I see that. Thank you so much. Today, I am not by myself. I have a very able team. As you might have seen in our poster, we are talking about the Finance Act 2023. Janet is from Kisii. Stephen from Kisumu, I see. Mnawakilisha County. Which county is not represented here? I will keep acknowledging you as you post. Daniel is saying there's a lot of sunshine in Eldoret. Westlands in Nairobi, thank you. Eldoret people, please share the sun. It's a bit cold here. Nakuru County is represented. Kajiado, thank you so much. Mombasa, I see there are so many people. We have a team. This is a State House team, okay. I see Opo Malindi, Bomet. Thank you. I see the counties represented. Kilifi, Lamu, Umoja, one in Nairobi, Kakamega, Ezekiel. Thank you so much. Let me see, who else is here? And Nairobi West, Kiambu County. Kiambu County has not been left behind. Even Tharaka Nithi is here. Temaner, Kisumu, I see. Who else is here? Annette Onyango, thank you so much. I see all the counties in Kenya. Oh, we have somebody listening from Johannesburg. How is South Africa? Kevin Omolo is here. Thank you so much. For those of us that are sending out requests to record this session, I just want to tell you outrightly that we are recording this session and we are actually streaming it in our KRA TV. If you search for KRA TV on your Google browser, whichever browser you're using, Matthew from Industrial Area, thank you so much. You'll be able to get a link. In fact, let me just ask our team to post the link right now. Just stay tuned for the link. We are streaming live. Julius from Manyata, Embu County, thank you so much. We are streaming live, so please share out the live link for those that would want to catch the recording. Yes, thank you so much, team. Betty from Isiolo. All right, thank you. Thank you so much. So before I move much further, we just want to open the session today with a word of prayer. I've seen many hands up. But I would like, let me pray as we open. But towards the end, I'd like one volunteer to help us in closing with a word of prayer. Tax Education, thank you so much for posting the link. This is where the recording will be found. So I want to direct you to join our live stream. Please remember to like and subscribe to our page as well. So let's pray. Our dear Heavenly Father, we are thankful for this morning. Thank you for the gift of rains, and even in areas that have sunshine, we are grateful. As we start the sensitization on the Finance Act, we pray that you go before us, give us an understanding. For our listeners who have questions in various areas, I pray that their questions will be answered and they'll be able to understand what their tax obligations are. We commit ourselves and our panelists in your hands. In Jesus' name we have prayed. Amen. All right. Thank you so much. So today, as I mentioned, I'm not by myself. I have two very able panelists, and confirm that you can actually see my screen. I saw hands before, so I think I will see additional hands or a comment on the chat box, but I think you should be able to see my screen. We are talking about the Finance Act 2023, and I have two very able panelists here with us. I want to give an opportunity to the first panelist to just introduce herself, and just a moment, let me just unmute her. Now, she has a very rich history. This lady has worked under the government, with the government under the Big Four agenda, and she also is a certified public accountant, a CPAK. She has worked in the KRA corporate policy unit for around 5 to 6 years. She has vast experience, and she's none other than Christine Majani joining us. Christine, I hope you can hear us. Yes, let's take that again, Christine.
I can hear you. Can you hear me?
Very, very, very clearly. I want to welcome you to today's session. Maybe let me give you an opportunity to just greet us and give us your opening remarks.
Thank you. My name is Christine Majani. I work here at the Corporate Policy Unit. I'll be assisting with taking you through some sections of the Finance Act 2023. Thank you and welcome to you all.
Thank you. Thank you so much. Christine is one of our panelists who will be taking us through matters to do with the Finance Act. And then let us go to our second panelist of the day. I just want to unmute him and give him an opportunity to greet us, and then I'll be giving you his profile in a moment. Mr. Chesterham Leonard, I hope you can hear us from where you are. Let me just give you an opportunity to greet us.
Good morning, everyone, and good morning, our viewers and our taxpayers. My name is Leonard Cheserem from Kenya Revenue Authority. That's Corporate Policy Division under KRA. So I'm happy to join you today to just explain about the Finance Act and how it affects our taxpayers and our viewers out there. So thank you and welcome.
All right. Thank you so much, Mr. Chesterham. I'll be reading out his profile in just a moment so that you know that we are really in safe hands. I want to ask us to ask as many questions as possible on our chat box regarding the Finance Act. What is it that you would like to know? I am made to know that we have questions that came in much earlier. I think some of us want to know about the changes in the NHIF rate. Is it? I'm looking through our chat box, but don't worry, I'll be reading through the questions even as we proceed. So just post your questions there. I know in the course of the presentation, some of your questions will be answered. I see questions to do with withholding taxes. I will be reading the questions later on, but kindly just drop your questions on the chat box. We will take them as we proceed. Now, on to our presentation. I think I want to welcome Mr. Chesterham to take it from here and guide us in terms of how we are going to proceed with the
Brenda, you can hear me? Brenda, you can hear me?
Loud and clear. We can hear you loud and clear.
Okay.
So yes. So I think the presentation is also visible for you.
Just it's coming up. It's coming up. I think it's fine. You just can put in a presentation mode. And I hope everyone can hear me. In case you find challenges, our moderator will be able to pick it up and probably stop me where I'm likely to, in case there are any challenges in terms of my voice and in terms of you getting me from wherever you are. So as I said, my name is Leonard Cheserem, and I'll take you through the first part of the presentation in terms of Finance Act. And we will have two sets of information that they are going to deliver today to you. And the first part of it is anything that we call it tax-related amendments. Then the second part of it is something that may interest you as our viewers, because you must have seen it in the media that Kenya Revenue Authority has been given some mandate to collect certain levies, and you will want to know how it works and how it affects your various activities and your various maybe incomes. And that's what we are going to also deliver, just to explain so that you can be able to understand. Allow me not to use my video because of, I think, bandwidth, just because of internet, but so the first amendment basically is, I want to just also explain, because for those who are in business and those who are also needs to know a little bit about issues to do with what we call winnings. The laws, the Income Tax Act actually imposes a tax on winnings at a rate of 20%. Now, when we talk about winnings here, we're talking about winnings arising from betting, gaming, prize competition, and lotteries. And we, over the years, what has been happened, because these are tax that was put in 2018, with the law as was imposing it on a gross amounts. Now it is going to be on net winnings, which means basically if you stake in something, then you get something as winning from betting. Then what the law provides now, that you subtract what you put in, then what the difference is what is now going to be chargeable to withholding tax on winnings. And for those who are remitting, that's how the law is, which means you need to remit before 20th of this month, for those who are dealing with these issues to do with betting. Now, for those who are dealing with for employment purposes, so there are certain amendments that has also been provided for in terms of Finance Act of 2023 to deal with employment. And one of them that what the law has been amended is when you're dealing with gains from employment, and you happen that you are reimbursed a payment of traveling allowance to perform official duties. And this traveling allowance that we're talking about here is in line, for you to perform your official duties, and where such amounts are based on the standard mileage rate approved by the Automobile Association of Kenya, then that one will not constitute gains or profits from employment, which means you will not be taxed on that amount, because you've been just reimbursed because of traveling allowance, and at least you've used the required rates, which is the Automobile Association of Kenya rates. Then you will not be taxed on them if it's for purposes of official duties. Then for those who are who enjoy some facilities that are paid by the employer, like club entrance and subscription, club entrances, or certain subscriptions that the employer pays for you, then you will be taxed on that amount as a benefit. And this is a benefit because what the law has done is now it's allowing it on the employer as a deductible expense, which means on the employee now will suffer that tax, but the employer will be able to be given it as a deduction. So it means now it's a benefit to the employee. Now, there's also a change in the Finance Act where when we're dealing with ESOPs, last year, there's an amendment that provided that when you're dealing with things like employer share ownership plan, you will only be taxed when you exercise that option, when you take up the option. But now what the law has done is to provide to just align to those amendments that when you are also determining the market value of that share, then the market value of that share should be also in line with that amendment, which basically it's only at the point of exercising that option is where now you can be taxed on it as a benefit. Now, the next amendment also is just to defer certain employment income in form where you are paid in form of shares instead of cash emoluments, where we are dealing with startups, because what the government, what the Finance Act of 2023 is trying to promote startups, and it's also ensuring that if you are given shares in lieu of cash emoluments, then that amount is deferred until a later date, which should not go beyond 5 years. Then you will be taxed that amount, which means now if you're paid 100,000, then 50,000 is in form of shares, then you will only be taxed at 50,000. Then 50,000 that remains now basically will be the one that will be taxed at a later date, which now the law provides now that it's within 5 years, depending on certain circumstances happening. Now, for those who are dealing with a TOT, because I know this is a major change as well, where now the threshold has always been between 1 million and 50 million. But what the law has done now is to reduce that upper threshold from 50 million to 25 million and increase the rate from 1% to 3%, because these are some of the amendments that were done during the COVID period. And the law now has amended the upper threshold and also increased the rate from 1% to 3%. For those who are dealing with cryptos and there are platforms that are here in Kenya and outside Kenya, and income is earned from these platforms, what the law has done also is that the owner of the platform, if you are owner of a platform in Kenya, then you are required that if there's a transfer or exchange of those digital assets like cryptocurrencies, and then what happens is that you will be required to deduct those amounts and remit to Kenya Revenue Authority within 5 working days. So if you are dealing with that platform, then you are required to withhold and do it within 5 working days to Kenya Revenue Authority on transfer of those in case where there is a transfer or exchange of digital assets. Now, for mortgage, for those who are dealing with mortgage, you realize that there are certain institutions that as per our law, that's the income tax, that you will be able to claim what we call mortgage interest expense at the end of the year. And the law allows that you can claim up to a maximum of 300,000 when you get a mortgage for purchase of a residential home, which means basically as an individual, then that's what will happen. Now, the law now has been amended now to allow even cooperative societies, which now when you borrow and you get mortgage for purposes of purchasing a home, then you will be able to enjoy that mortgage interest. So we can proceed to the next one. Now, just back a little bit, one slide back. Yeah, that one, yes. There's something also new that the law has introduced for those who are dealing with where the government is trying to encourage people to save for a post-retirement medical fund. And the law provides now that you will be able to enjoy a relief of 15% of that contribution to a maximum of 60,000, which means now the government is encouraging people to save for post-retirement medical scheme, where at the end of your retirement, then you can be able to use those funds to purchase a medical cover. And what the law provides now, that the moment you contribute, then you will be able to enjoy a relief, what we call a tax relief of 15% of the contribution, then subject to a maximum of 60,000 per year. Now, for those who are dealing with rent like MRI, what the law has also done is that now the law provides now that the commissioner under the Tax Procedures Act can appoint a person to actually deduct MRI, which is we call monthly rental income, and remit to the commissioner within 5 working days. So what the law has done is that now previously it was not there, but this is a new shift in terms that if there are those property agents who are now managing property on behalf of the owners, then if they receive rent, then they should be able to deduct when they are remitting, of course, to the owner, and then from there they can now within 5 working days they are supposed to remit the same amount to Kenya Revenue Authority within 5 working days, and this is very critical as well. To ensure that if there are those instances where we can be able to get this money from the property agents, then it will be easier in terms of also compliance. Now, all withholding taxes now, what the law requires is that all withholding taxes should be remitted within 5 working days after the deduction. So what it means basically is that it's a shift from what has always been there, where you are required to deduct and remit the amount 20th day of the following month. And so remitting the amount on the 20th of the following month, basically now it's that's a mega shift in terms of how withholding taxes will be remitted to the commissioner, because it requires now that should be done within 5 working days after the deduction is made, which is a shift from what has always been there over the years of 20 days, 20th day before the following the end of the month in which the deduction occurred. Now, for those who I know have been asking a lot of questions in terms of the new individual tax rates, we have a new individual tax rates of 32.5% and 35%. This is over and above what we used to have of 30%. So the only change that has happened is where I've highlighted in red, where we are saying now on the first 288,000, that's 24,000 per month. That's what is being taxed at 10%, and that has always been there since it was put. The next 8,333, that is, I can see people saying they can't hear. Maybe you can confirm to me, Brenda.
Leonard, you are loud and clear. I think I can hear you clearly.
Okay.
Let me see who is saying they cannot hear you. I think it must be a user challenge. Flora, perhaps you might want to check your device. Elizabeth
okay,
is also
you.
saying they can't hear. Elizabeth, okay. Esther is saying they can hear you. So I think the two who have commented on it perhaps need to check their device.
No problem. Thank you, Janet. And thank you, Elizabeth, for that confirmation. I think even Prudence, thank you so much for that clarification as well. So what I was explaining basically is on the individual tax rates. Of course, individual means if you are self-employed, these are the rates you apply. If you have if you have a company that you've used your own APIN, then this is what happens. If you are basically an employee, this is the rates that will be used. And the first is 288, which I said this is what has always been there, 24,000. The first 24,000 is taxed at 10%, that's per month. And then the next 8,333, that is for 25%. Then when you go to the next one is on the next is 5.6 million. So here, previously, what the law was anything in excess of 5.6, anything in excess of 32,000, of course, was 30% per month. Anything in excess of 32,000 was the one that was actually being taxed at that amount, which means anything in excess of 5.6 is what was suffering 30%. So what the law has done is just to split that amount and say now on the next 5.6 million, then it will be taxed at 30%. So that's basically between 32,000, any amount in a month between 32,000 and 500,000 are the ones that will suffer the 30%. So anybody who is earning between anything in excess of 500 to 800,000 is the one that will suffer 32.5%. And anything in excess of 800,000 per month is what will now suffer 35%. So that's how the rates have been changed. So it's only the main change is that it's only affecting those people who are earning in excess of 500,000 per month. If you are not earning anything to do with 500,000 in a month, then this rate is not going to affect you, because it only affects the earners. We can say anybody who is earning above 500,000, because between 500 and 800,000, any amount in between there is the one that will pay charge 32.5, and anything in excess of 800,000 per month is the one that will suffer 35%. Now, I want to come to also any pertinent issue of how do you deal with secondary employees. Over the years, all of us, we understand that the secondary employees have always been taxed on the upper rate, which is on the, when they look at the tax band, it's always taxed on the highest tax band. Why is it? Why is this so? The important thing that we also need to understand is that the secondary employer is not aware of what the primary employer, how much the primary employer is even paying you. And secondly, also there's a risk by the secondary employer taxing you at 30%, and then it happens that you've met the threshold, which is anything above 500,000. So to ensure that this works out for everybody, so the law has always been that you apply the upper threshold, the upper rate, and then when you are doing your annual returns, then that's how you regularize. And anything is in excess now, that's what you will claim or request or apply for refund, because that's something that will happen. Because sometimes you find some people also maybe they may not in the secondary as a secondary employee, they may also be enjoying relief, which is not the right thing, because personal relief is only enjoyed once by employee. And then the second thing also is to ensure that at the end of the year, you just file your returns, you regularize that one. Then anything that you seem to have overpaid, then the law allows you that you can request for refund. And what the law has done basically now is also to reduce the time where refund can be given to 6 months instead of the 2 years that was there previously. And that's what has always been. Even 30%, you realize that there are people who are earning less than some amount that were not even being charged at 30%, ending up paying 30% even for amount that's less than 24,000. And that's what has always been happening over the years. I hope it's that one is clear, especially for secondary employees. I think
it's very clear.
Just
before we can proceed, maybe I've seen a question. Somebody, just because you're talking about PAYE, they're asking now about pension. Were the rates affected in terms of the pension? I've just seen a question here regarding the pension.
Okay.
Yes.
No, we still use the pension, the 400. The first, is it the first exemption? We exclude the first 600, then there's a way we tax pension now. No, we didn't change the pension rates. That one I need to be clear as well, that we didn't change. We didn't change the pension rates. We didn't change the pension rates.
Thank you. John is also asking on director's fee. Then do they continue pay at 30% of the highest bracket, or do we get each director annually to confirm? Let me see this question, to confirm their tax bracket.
I know it's I don't, if you can be able to confirm, I think it's fine, but I know mostly the problem is the risk that may remember that for an employer, the moment you don't withhold on PAYE at a relevant rate, then you will be required to pay as if you are the person who earned that income. And that's the risk that has always been happening, because if you are not able to confirm, what happens if, remember that we can have incomes even outside the normal employment income. And that's also the risk that you are you also have other incomes that needs to be brought into the tax net. And then you happen that you are likely to eat in excess of 500,000. So, and those are the challenges that has always been there. Confirming is maybe appropriate, but I don't think it's gonna be easy in terms of implementation. And the moment we do spot checks and find out that that person has it in excess of 500, then you'll be liable as an employer to actually pay on that amount.
Thank you, Chess. I think we can proceed.
Now, I'll come to the issue of maybe I need to just allow me to clear something also that is related to PAYE instead of coming to it at the end of the presentation. That's on housing levy. I think it's also important that we talk about it here now, since we're talking about anything that's affecting my payslip or anything affecting my my income as an individual, for example. Then I just want to also explain that one. I know there's a presentation. You can just go to the end of the presentation, then I'll explain everything together so that I don't come back there. The second last. Now, the housing levy that was introduced by Finance Act of 2023. Just the next slide. After that one. Just the next slide. Before that one, yes, that one.
I think it's okay.
Yeah, that's the one. So I just wanted to explain this one because I see there are a lot of questions coming in on housing levy before we go to the other indirect taxes. The first item there, what the law has done is that it is you are going to be charged, or you are going to be required to pay what you call the affordable housing levy at a rate of 1.5% of the employee's gross monthly salary. And I want also to quote that it's staying gross monthly salary, and the same amount also will be paid by the employer as well. So the employer and the employee pays the same amount. And then the second thing is also you need to realize that for secondary employees, remember that we are talking about gross monthly salary. If you are a secondary employee, if you are a primary or secondary employee, you are talking about the cumulative amount. Even if you are paid by the first primary employer, then 1.5% will be deducted from there. Even if you are paid by the secondary employer, then you will be also be required that 1.5% is deducted, because we are looking at the base. We are not looking at separated payments from employer, because at the end of the day, when you constitute your total salary for that month, any income in that month, you will now be able to accumulate everything. Because even for PAYE purposes, we always, at the end of the year, you realize that everything is accumulated, even if it's coming from primary and secondary employer, everything is accumulated now, and it becomes one return. The same thing to affordable housing levy, that because it's a proportion, it's not a value of the amount. If it was a value of the amount, like the way we deal with NHIF, then you say maybe my salary is 100,000, then I'm required to pay 1,700. Because it is a specific amount. But for this one, it's a proportion, which is a percentage, where now you'll be required now to deduct. And the law is very clear to the employer that you will be required to deduct you will be required to deduct at the rate of 1.5% per employee whenever you make any payments, whether it's on wages, whether it's on salary. And then the second aspect also, that this amount is not refundable in the first place. It's not refundable, which means it's more like a tax. It's not refundable, so you will pay. It goes to a fund that will be set by the government. Then it goes to Exchequer, and then it's appropriated by Parliament. Then it goes to for purposes of the objects that have been set. And there is no ceiling, it's a proportion. So there is no maximum, because in the bill there was a maximum of 5,000, but for the act there is no maximum. So if you earn $1 million, you just put 1.5% of the million. If you earn 100,000, you say 1.5% of 100,000. Even if you earn 10,000, you just say 1.5% of the 10,000, because the law does not provide that even somebody who is earning less than 24,000 should not deduct. So it's everybody across the board. Then for purposes of taxation, of course, we are still making some certain clarification, because if you pay this amount, are you supposed to be taxed as a benefit? And that's what the law does not provide for that. But I think you will not be taxed as a benefit because it's a levy, and we will look at it in terms of ensuring that this is also clear. And I think with time we are going to clarify as well, together with the Ministry of Housing, on certain aspects that has not been clarified. But I know some people have already filed since yesterday. Because the law requires that within 9 working days at the end of the month, then that should be actually filed. So I don't know if there's anything related to that one as well.
Yes, thank you so much, Leonard, for what you've taken us through. I think let's pause here for a moment and just pick up these questions on housing levy because they've come out strongly in the chat box. We have one of our listeners who is following us on our live stream, and they also have a question on housing levy. This is in terms of backdating. I don't know whether you are at liberty to talk about the backdating aspect. I've seen similar questions on our chat box.
Okay.
Some taxpayers are asking. In fact, let me just read out one question that I saw here. There are quite a lot, but yes, maybe you can touch on the backdating, and then I can read out a few other questions that perhaps were not covered when you were here.
Okay. Yeah, I'm seeing a lot of questions coming in. As I said, there's no ceiling, so it's 1.5% of any amount that you earn. Then secondly, it includes both cash and non-cash benefits. It also includes bonuses, which means it's anything that you are paid in a month, which actually serves as even tax. In short, let me use it in a simple words. In short, what basically is likely to happen is that you are likely to equate the base to what is being used for purposes of taxation, because that's what the gross salary is all about. So it's so in short, it's almost equivalent to the PAYE base that is used for purposes of taxation. So, and that's what basically it's all about. So it includes both bonuses, it includes non-cash benefits, it includes cash and non-cash and cash benefits, and then any allowances that you are given for that as an employee. Then secondly, I wish also to inform you that there is what we have in income tax that we call affordable housing relief, which is not the same as this one. So there's another, there's the law under income tax where if you contribute, what we call the bomayangu, where if you contribute to that one now, then you will be able to enjoy even a tax relief for that purpose when you contribute to that one. But for this one, it's separate. This one is a levy, and this one is not. These are mutually exclusive, where you contribute for purposes of owning a home under the Income Tax Act, where it allows you that you can be able to enjoy even tax relief. Now, and the 150%, 150,000 that somebody is talking about, that is for the other one. That is where you contribute for purpose of owning a home, then you'll be able to enjoy that even a tax relief when the moment you have been allocated a house and you are waiting for it. But for this one, it's a levy, which means the way it has been structured basically is that there's no way even you are saying I've contributed, so I want to apply for house. No, there's nothing like that completely. So what happens is basically is that you will pay as a levy, the way we pay petroleum levy, the way we pay for those who are sometimes petroleum levy and many other levies. This is basically what's happening, because you are paying a certain levy to actually help in building certain things for to help in terms of government being able to address certain challenges that they have envisaged. So this is separate from what somebody is talking about, the affordable housing, the 150,000. No, this one is completely separate. These are levy under Employment Act, and this levy is paid by everybody. And then the other one on the Income Tax Act, where you are even enjoying a relief, that is where you contribute for purposes of purchasing a home. But the way this one has been structured is completely different. I hope that is clear.
Yes, that is clear. Allow me to just give an opportunity to one lady here. I know we are continuing with the sensitization, but so that we can adequately answer their questions. Elizabeth Ndegwa, I know you are the one who had a question to do with the backdating, and I've seen you're seeking clarity here. I've asked you to unmute yourself. I don't know whether you're in a position to do that and actually just get to ask your question. Elizabeth?
Yes, yes, I can. I've unmuted.
Thank you. Please
My
introduce
question
yourself.
is,
Just tell us where you're asking from, and then ask your question.
yeah, I'm asking from Nairobi. I'm actually a HR. So there's been no clarity from the courts regarding whether this is the new tax brackets and the housing levy will be backdated or used retrogressively. But KRA has issued a notice about it and also updated the P10 forms to include it. So my question is, what informed KRA to insinuate that you're going to backdate when the courts were not clear? Is it that there was a notice that was issued to KRA?
Okay.
Or yes.
All right, that is clear. It's clear. Thank you for your question. Leonard, just maybe a response to Elizabeth, and then we move on.
Okay, thank you. And I think with that public notice now, it means basically that the rates apply from 1st July 2023. So what had happened with the court was only suspension. You know, the law has not been repealed and nothing has happened. It was only suspending on its implementation. But now it was lifted on 28th of July, basically informing the parties that it can be implemented and within 60 days before when the case should be determined and concluded. So basically the law provides that it's 1st July 2023, unless we are guided by courts that they need to vary that rate, which they didn't vary that implementation date, then we are guided that the law provides that it's 1st July, unless we are guided by courts that we need to vary the effective dates. And that's why even the public notice from the Ministry of Housing, the public notice from Kenya Revenue Authority, basically just confirms what the law provides, that is 1st July, unless we are guided by the courts that the implementation date is not 1st July.
Thank you. Thank you very much, Sarem. I think, thank you for that clarity, Elizabeth. Thank you for your question. I think we may have dealt, unless there's anything else you want to talk about housing levy, because the majority of the questions that I am seeing here is clarity on the gross. I see questions. Let me just brush through the questions quickly, and then we can proceed on housing levy. Somebody asking, is housing levy a tax or a fund? I think you had mentioned it, but just for clarity, somebody's asking, is housing levy refundable? I think you had answered that. Is it applicable for secondary employees? I think you had answered that. And then, yes, is housing levy for persons with disability too? I think this is a common question that has come up a lot. I don't know whether you want to say something about it.
Yes, there's nowhere that it's exempting anyone, so it's applicable to everyone. And yeah, that's what I will just say, because it's affecting everybody.
Thank you, because I see follow-up questions. Is it applicable for board allowance? Is it applicable for casuals? Is
Not
it
for board? Yeah,
for board allowance?
No, board is not an gross monthly salary unless you are receiving a salary. But for board, you remember,
Okay.
for board, basically they only paid allowances, so they don't receive salary. So for board, but for casuals, yes. For interns, yes, because they actually, when you look at the Employment Act, who is an employee, it's very clear what an employee is. It's anyone that has a contract with the employer, in terms of either you are an intern, whether you are a casual,
Okay.
that is an employee. But for board directors, where they are only receiving allowances, no.
Okay, thank you for clarity, even for the interns, because that's another common question that we've gotten. Let me just read through these questions. Somebody is asking, please clarify on backdating. I think you have done that, Dennis. I think you have gotten that question. Let me see what else is here on housing levy. I think we have, again, on housing levy, after deducting 1.5% on gross, is pay still based on the same gross, or is it based on the balance after the 1.5%? Then that's a question by Rick.
Okay. Yeah. Thank you, Rick. Yes, we have looked at the law from both sides, looking at the income tax and looking at the Employment Act. Actually, the base is the same. You still get 1.5% from the same base, and you still get the PAYE from the same base. And we understand the challenge because it doesn't bring a lot. It brings a lot to do with double taxation, and we will look forward to actually providing further guidance in due course in terms of how do we address. Should we deduct first and then you tax what is remaining? Because the problem now is the law does not provide for that one currently. And that's something that we need to relook at going forward in terms of what needs to be done. And I think the government, there's a multi-agency looking at that one as well. But the law is not there. That's what I want to confirm to you, that the law is not there for purpose of deducting first and then you tax the remaining. That one, the law is not there.
Maybe just a last question and then we proceed to other things. Somebody's asking, is the housing levy eligible for tax relief? I think you had mentioned it, but just repeat it for the sake of those that need clarity. Is there a tax relief on the housing levy?
No, there's no tax relief for housing levy. And you can only enjoy tax relief if you are contributing anything else, which in terms of contribution to what we call affordable housing under the Baumayango approach. If you contribute anything outside that one, the one I can call it, is like the one that we used to call house ownership, home ownership savings plan. That's what it's Baumayango, it's closely to that one. So if you are doing home ownership savings plan, of course we repeal that one, but there's something close to that, and then that's the one that enjoys relief, where you are saving to purchase a home, which is different from a levy that is being provided for under the Employment Act.
Thank you. Two more questions that I've seen here. For those that are have an ongoing mortgage, and they're asking, are there exemptions on housing levy? Are there any exemptions? And then even as you answer that, okay, yeah. Yes, continue.
No, there is no exemptions. As I said, it applies to everyone, whether you have a mortgage, whether you have a house, you don't have a house, it's everybody. Whether you have a mortgage, you don't have a mortgage, it applies to everybody. It's across. As I said from my start, is that it's a levy that is closely to what we have in petroleum, where everyone purchasing a petroleum product pays a petroleum levy. So it's closely to that one. Or there was a time even, I will use an example where in some countries where there is a toll fee that you need to pay every other time you use a certain road. That's basically, it's close to that one, where you're saying as an employee or anyone earning salary basically pays a 1.5% on their salary. But the problem we are saying, as I said earlier, is just to look at how can it be made fair. And that's something the government will look at in terms of ensuring that it doesn't result in double taxation. And that's what but for employers, at least for employers, they're able to deduct as an allowable deduction, which means for employers, there's no problem. But the one that is a bit, we feel that is a bit of a pinch is the employee.
All right, thank you for that clarity in terms of the employer of it being an allowable deduction. So again, I've seen a concern by our listeners regarding the backdating. I've seen a question, many are asking if we had closed our payroll, prior to this ruling being made or this orders being lifted, what happens to them? And then somebody is asking about 2% penalty. Is there a penalty for late payment of housing levy? Maybe you can talk about those two.
Yes, there is a penalty if you don't remit by 9th, by 9th day of the working day of course 9th day of August for purposes of July, then there's a penalty of 2%. Now, because now that is, remember that what carrier has only been given is a collecting agent, for there's certain things that needs to be ironed out, especially for those who are not paid, probably like by yesterday. But I know the 9th working day is today, the last day is today. 9 working days today. So I know there are quite a number who have actually remitted because this law was put in on 28. The public notice was put in on 28 of July, and people who have made efforts to pay, and they have paid. But the penalty will apply. Yes, that one for sure. That's what the law provides, and the penalty will apply. And unless we get a different guidance from the ministry, but that's what the law provides currently.
All right, thank you. Thank you for that. I think we've given clarity to those who are asking about penalty, and today is the last day for the payment of the housing levy. There's a question, Leonard, regarding the July, the housing levy that was due, with the backdating now. What happens in terms of the penalties in such a case? I think that's where the concern is at.
As I said, today is the last day, as you've put it clearly, for paying. When you count the 9 working days at the end of the year, at the end of the month, actually is actually today if you are not paid. But we always advise taxpayers that if they can do it on the PAYE return, I think that one works because it's on 9. There's no difference. It's the same, almost the same day. Actually, it's majorly. So if there's a difference, it's only one day. But we've always guided taxpayers that it's better to do it because we're doing it together with the PAYE return. If you are not paid, then it means now you need to pay. You need to file for this. You need to file and pay because that's what the law requires. And then if there are issues to amend your return, I think you can be able to seek, you can write to KRA, then they can be able to clarify, or even you can get in touch to your relationship manager or account manager, then they can be able to guide you, especially on issues to do looking at amending your return in case you had already filed for PAYE only.
All right, thank you. Thank you so much. I think for those that are joining us today, we had another sensitization that happened on Tuesday. I've seen a lot of questions in terms of how to file, how to amend, how to generate payment slips. I think at this point, let me just redirect you. We will post the link here. The actual training is actually available in terms of how we file for housing levy and how it is paid for. Remember that housing levy is paid for separately from PAYE. So we will post the link here. We had a tutorial for you. So we will not be doing it in this sensitization. However, we will post the link so that it can be available for you. Yes, and in fact, a video is coming up in just a short while, giving us the step-by-step directions on how to post, or rather how to file and declare the housing levy on KRA TV. I thought it's important for us to just make that one clear. Leonard, let me just bring you to a question that I've seen a lot also regarding foreigners, expatriates, and matters to do with housing levy.
Yes, I have seen that question coming up majorly from the taxpayers. Now, yes, for if they are an employee in Kenya and they are not protected by what we call the Privileges and Immunities Act, I think they will pay. What I meant by that one is that those who are working in diplomatic missions, but they're not Kenyans, probably those are the ones who are protected by the Privileges and Immunities Act. But if you are an employee, then what the law, moreover, they are remitting the normal other statutory deduction. Also, this one becomes one of the statutory deductions as well. I hope that's clear, because this is also one of the statutory deductions by the government.
Yes, that is clear. I see a question here regarding still on housing levy. How do you, I don't think this question should be for you, Leonard, but let me just read it out and maybe give a response. It's saying, how do you file for housing levy in a case where someone has no PIN? Do you want to take that question or do I take it?
I think if you can take it out right away, there's no problem.
Okay. All right. If you have gone to the pay sheets here, you may have seen that you are actually supposed to enter the member's ID number. This is it Gabby, Sydney Mulunda, yeah? I don't know whether you have gone to the actual sheet. You will see that it is requesting, or it is requiring for you to enter their ID number. Yeah. And even passport numbers. And I think a lot of questions came up in terms of passport numbers and expatriates. And this question was adequately responded to because of the alphanumeric nature of some passport numbers. I think David Busaule did that question justice and responded to it in terms of how you enter just the numbers, yeah, on that particular column requiring you to enter member number as opposed to entering the alphanumeric digits. But we'll post the link for you to just revisit that particular question. This is a concern, Lena, that I saw yesterday a lot about non-cash benefits. And the question was coming up because it's gross. So that means also the non-cash benefits are being taxed?
Yes. As I said earlier, is that it mirrors the PAYE base. So basically, that's what is going to happen because gross salary, when you look at it from even from the definition and from what the Employment Act requires, is everything that an employee is paid in that month. And as I said earlier, unless we amend the law, there are certain aspects that even if we were to exclude, unless it's excluded by the ministry responsible for housing and or for labor, and then that is going to be difficult because for KRA we're just implementing what is being provided by the ministry as a collecting agent on what exactly is a monthly gross salary, and it, as I said earlier, it includes all the allowances, whether cash or non-cash benefits. I hope that's
thank you.
coming out
Yeah,
clear.
thank you so much. Yeah, thank you. That is coming up very clear. Thank you. I think now we can proceed with continuing to talk about our sensitization for today. At the very end, we'll just give one or two people with very pressing questions to ask them, but I just want our team to just very quickly, because our time is well spent in terms of the remaining part of our presentation, and then we will proceed from there. So, Leonard, back to you. Even as I give him, I sort out the audio questions, I just want to appreciate John Nyachani. I see your hand. We'll be giving you an opportunity to ask your question. But yes, I'm sorry. I know once you mute yourself, I have to give you the permission to unmute. I'm sorry about that. It is just in the spirit of managing noise. I think, yes.
Thank you, Brenda. I think you can give my colleague Christine to present the next, that's the VAT and excise duty.
All right,
Chris. Just unmute her.
All right, sawa. Christine, I think you should be able to proceed now. Confirm?
Yes, thanks. Just confirm you can hear me.
Loud and clear.
Okay, I'll take you through the changes to the VAT and Excise Duty Act. So first of which is the change that we are all aware of. The VAT on petroleum products is now chargeable at 16%. So the preferential rate of 8% has been removed. Then VAT on LPG gas now moved from 8% to 0 rate. So LPG gas will now be 0 rated for VAT. Then another amendment in this act is that the act is just clarifying that the place of supply of imported digital services is in Kenya when supplied to both a registered or unregistered person. So suppliers of imported digital services shall be required to account for VAT in Kenya when they supply to both a person who's registered or unregistered for VAT. Then the other amendment is on the input tax claim. So the VAT Act has been amended by this Finance Act to require that a person who's claiming input tax should fulfill both conditions, which is to provide the requisite documentation like the invoices, and also the person who supplied to them should have declared these sales in the return. Then there are certain changes to the schedules in the VAT Act. So there are new exemptions. So all aircrafts and their parts are now exempt from VAT. Purchases of plant and machinery by manufacturers of pharmaceutical products or persons who are investing in the manufacture of pharmaceutical products will now be exempt from VAT. Then those companies that are under special operating framework agreement incorporated for purposes of undertaking other manufacturing activities, and here we are including also refining to mean manufacture, and whose capital investment is at least 10 billion. This shall be exempt from VAT. Supplies made to or by a school feeding program recognized by the CS Education, this will also be exempt from VAT. Then bioethanol vapor stoves are now no longer exempt. We shall see later that they are now zero rated for VAT. Then moving over to zero rated supplies, exports of taxable services. This was previously taxable, now zero rated. Inbound international sea freight services offered by a registered person will now be zero rated for VAT. I had mentioned LPG earlier. The supply of locally assembled and manufactured mobile phones, now zero rated. Then we are looking at supply of motorcycles of tariff heading 8711. The supply of electric bicycles, solar and lithium ion batteries, electric buses. So just to support the agenda of climate change and also clean energy. So we can see these are being zero rated for VAT. Then inputs or raw materials locally purchased or imported for the manufacture of animal feeds, this will also be zero rated for VAT. We saw that bioethanol vapor stoves were being removed from exempt and now they are zero rated for VAT. Last one is all tea and coffee locally purchased for the purpose of value addition prior to exportation, subject to approval by the Commissioner General. This will be zero rated for VAT. So that is all the amendments that we wanted to mention under the Value Added Tax Act. I don't know whether you'd want us to take questions at this point or we move over to excise and then take questions together. You could advise, Brenda.
Thank you so much, Christine, for that. I appreciate your question. I am just looking through. Thank you for taking us through the VAT. I'm appreciating the questions that are coming up, and I think let's hold it at VAT so that we don't proceed further than this. I think it will be prudent for us to just respond to the concerns and the queries of our taxpayers, because I see the likes of John who are here. Maybe let's give them an opportunity to ask the questions themselves. I was just also discussing with our staff dealing with return filing to see whether we can have someone come and assist us deal with matters with amending returns. But I just want to give our taxpayers an opportunity to ask questions. If that is okay, Christine, that's fine?
Yes, that's fine.
I want to begin with the very first person who raised their hands, and his name is John. John, I see your hand is still raised. So if you still, your question has not been answered, I'll give you an opportunity to ask your question. John? John, I have given you an opportunity to just unmute and ask your question.
Okay, I think
John, there's a lot of feedback on your end. Your question has been answered?
no, I want to.
No. We cannot proceed with your audio as it is, John. There's feedback from your end. Maybe as you resolve that, let me give another person. I'll come back to you, John, but you need to resolve the back the echo from your end. There's Rift Valley Institute Research who is here with us. Yes, let me see. Who am I speaking to? Where are you from? And please proceed with your question.
Yes, my name is Benedict. I'm based in Nairobi. Thank you very much for the opportunity. I'll be very, very brief.
Okay,
Benedict. Yes.
Okay, all right. Please ask your question.
Yes, my question is on backdating, but a different kind of backdating. Yeah? So I'll give an example. If in July, the employer gives a salary increment, but backdates it to January, is there room to exempt that backdated portion on the new requirements, because it basically relates to the prior months before the law, before the act became law? Yeah.
Okay. Did the backdating also involve that month of July? Is the increment touching on the month of July as well?
The actual payout was in July, but it was a backdated amount. The amounts actually involved prior months, months prior to July.
All right, that is clear. I think I will give Christine to respond to that. Maybe take a note of that question. Christine, I want to give an opportunity. You can respond to it and then we get to Collins.
Okay, so if I'm getting the question right, we are saying that the payout in July was an amount of, say, 500,000 shillings, and there is 300,000 which did not relate to July pay. I believe then that the whole amount, only the portion relating to the monthly salary in July is what should be subject to the changes that are being effected by this Finance Act, so including the housing levy. Because the change is talking about, the 1.5%, for example, of housing levy is on the gross monthly salary, and this is effective 1st of July. So we are talking about pay that relates to the month of July.
Thank you.
I believe that's clear.
Bernard, I think that is clear from where you stand.
It is only that perhaps so can it be corrected? Out of fear, we may have already used the entire amount, out of lack of knowledge, perhaps. So can that be recovered in subsequent, with submitting subsequent returns?
You want to take that question, or would you want Chesarem to?
Yeah, maybe Chess could assist, but I don't know. I'm not sure how. Maybe let me just answer. I'm not sure how easy or how you'd be able to prove that part of this payout related to months that were not being affected by the effective date of the Finance Act. I'm not too sure, but I doubt, because you're making this payout in the month of July. So I can't give you a yes or no answer whether you can get a refund. Maybe we could just consult further on the side, please.
Yes, Christine, that option is also available. Perhaps we can ask Bernard to leave us his contact details so that we can interact with him out of the session.
Yeah.
All right.
Okay.
Thank you so much.
How do I give the details? Do I type them here? How do I
inbox? Type privately as a direct message.
Okay.
Okay, thank you so much. Then I want to give an opportunity to Collins also to ask his questions. We are taking just a few questions because we will not proceed with the more on the sensitization. I've seen so many questions. I think it's only fair enough to hear you in terms. HP, I hear your question. I see you say that it could have been best if the Q&A was done at the end of the presentation. The reason why we are taking this Q&A now is because majority of the questions are still tied on clarity, people seeking clarity on PAYE and also the housing levy. So I felt it is only prudent for us to just respond to these questions now and then proceed. Collins, ask your question.
Thank you.
Where are you calling us? Yes, you're audible. Where are you from?
Okay, I'm calling you from Nairobi. So my question, I have two questions. The first one is on filing. When you file, both the housing levy and the NITA, because KRA still the collecting agent for NITA. When I get the confirmation return, it doesn't reflect those amounts. So how can I prove that I filed the NITA? How can I prove that I filed this housing levy? It just comes with the pay amount only. The second question is on VAT. So if I had not claimed some invoices for 8% prior, let's say, as long as they've not reached 6 months, will I still be able to claim them even after implementation of this 16% on fuel and the rest?
I want to welcome Christine to start with the VAT question.
So thank you. I believe you should be able to claim the invoices that have not passed the 6 months threshold. I want to believe the system is able to is being tailored in such a manner that when you show the dates of the invoices, that if they related to 8% for goods that are in that bracket, then you should be able to claim your input tax. If these are if you're talking about supplies that were done before 1st of July.
All right. Do you think you can be in a position to respond to the previous question? I know some of it has to do with return filing, but
Yeah.
in as far as filing is concerned, maybe let me just take this question. For NITA and for housing levy, if I got your question correctly, Collins, you said in the acknowledgement receipt, you are not seeing the details of NITA and housing levy. Is that the case?
Exactly.
Yes, NITA and housing levy is our agency revenue. Agency revenue ordinarily are not reflected in the acknowledgement receipt. Yeah. However, proof is when you go to make the payment, you will be able to generate the payment slip, which I think you did as still under agency revenue, right?
Yeah,
Collins?
and agency revenue, yes.
And you made the payment, right?
For the payment, you get it, but just the proof that of filing is what I did not get.
The proof of filing.
Yeah.
We will take these questions. Today, we are not able to respond to a lot of questions regarding filing because we do not have the team dealing with the filing. I was trying to get them on board. They were meant to be here, but there's a request. You can send that particular question through to our call center. Yeah. And we should be able to give you a response. We want to limit the questions to tie on the Finance Act just for the benefit of us and the taxpayers who are here. Let's try and limit the questions just to do with clarity on the act in itself. All right?
Thank you.
That question was dealt with also in our previous sensitization. We will post the link here so that you can revisit it when we were doing the filing tutorial.
Okay.
All right. Thank you. Thank you very much. We take 2 more questions and then we proceed. Peter Wick, I see you here. I want to please limit your question to the Finance Act.
Oh, thank you. Thank you for the opportunity. I hope I'm loud and clear.
You're loud and
My
clear. Where
question
are you
is on
calling us from?
ESOP. Oh, I'm calling from Nairobi, Upper Hill. So I have a question on ESOP, and I'll put out a scenario. Assuming that my employer has given us an offer to buy ESOP shares at a discounted price of 15 shillings, while the shares are trading at 45 at the same time. So discounted price of 15, the market price at the time of purchase is 45 shillings. And then we are told there is a vesting period of 5 years. So it's upon 5 years that when you redeem these shares is when you'll be able to get value of the shares that you bought at the prevailing market rate after those 5 years. So my question is, at what point do we tax the benefit that accrues out of the whole transaction? Is it the difference between the discounted price and the share price at the time of purchase, or the discounted price and the market price after 5 years when that offer, when you vest that ESOP?
Okay, I'll take that. Thanks, Peter, for your question. So first of all, the taxation on that benefit will happen at the point when you as the employee exercises your option to take up that option. So it's not at the point when the shares will vest. That was what was there previously, but the act was amended to say that the tax point is at the point of exercise. And we are saying that the date we'll be considering when looking at the market value of that share is the date when you exercise that option. So we'll be looking at the value of the share when they were granted to you, or rather that the difference between that and the market value of the share at the point at which you're exercising. Then that difference we shall apply the tax rates, and that is when that tax shall be payable to KRA. Remember, it shall be payable by your employer because it is an employment tax.
Okay, so you're saying, just a follow-up, you're saying the applicable tax will be at the point of taking up the offer. That is the difference between 45 and 15. So which tax are we paying and at what rate?
So remember, it's an employee share option. So we are saying you have a benefit of 45 minus 15. This is the share price. And then we are multiplying that by the number of shares, assuming you are granted 1,000 shares. Yes. So that would be 30 times 1,000, which is 30,000. That is the amount. So this is going to be added. Yes, this is going to be added as part of your employment income and taxed at the graduated rates. So if we are to single out the 30,000, we are adding it to you earned a salary, you got a car allowance, you got this and this and this, and then we are saying this is your benefit this is your ESOP benefit, then that is what is subjected to tax. But remember, at the point you're exercising the right to those shares, not when they vest. They could vest after 5 years, but you decide that you're selling year 7, right?
Yeah.
So at year 7, in the month of July, when you've identified a seller, or rather when you're selling the shares, then KRA expects to see in July of that month of that year, there was tax on this share benefit to this employee.
All right.
Yes.
I think it's clear. Thank you so much.
Okay. Thank you so much for that clarity. Maybe you just pick 2 more questions. I just want to confirm that we have a team joining us to respond to questions on those who want to amend their returns. So I'll be giving them an opportunity just to speak in a moment, but I want to just give one Stephen an opportunity. Please mute yourself. Who was it that I gave an opportunity to ask the question? Okay, let me just go back to muting everyone, and then I'll give our host an opportunity to speak. Stephen, please make your question very brief and ask your question. I want to see whether there's a lady here who wants to answer the question in the interest of gender balance. I think everybody who's asked before are just gentlemen, but I want to see those who are raising questions. Is there any lady in their midst? Okay, in that case, Stephen. Stephen, proceed and ask your question.
Hi, this is Stephen.
Yes, tell us where you are asking the question from, and please limit your question just to the act for now.
Okay, I'm Stephen. I'm asking from industry area. So my question was regarding the withholding VAT. You find that because we are like a big distributor, we are receiving so many invoices that we pay maybe on a daily. So and we withheld mostly on a daily. So what happens to now paying within 5 days?
Thank you for your question. Let me just give just a moment. Let me give Christine an opportunity to respond to that question. I think I may have muted her. Christine?
My colleague Chess will take that question.
Okay, thank you so much. I think he's able to unmute now and proceed.
Yeah, thank you, Steve. As you've put in, you've asked that what happens in terms of payments because you are a big distributor, and you've, of course, you will impose withholding VAT to many others who are buying from you. The law was amended. Of course, I hope you are aware that the law was amended to provide that withholding VAT is at 2% of the taxable value. Now, for the changes in the Finance Act of 2023, all withholding VAT, including all the withholding taxes, including withholding VAT, was amended that it also provides that you need to deduct when the moment you deduct, then within 5 working days, you need to remit to the commissioner. Yeah, so what you're asking basically is that what happens in terms of you are required to withhold and pay. So basically what it means is that you'll have to consolidate amounts, maybe within 5 working days, you submit, within 5 working days, you submit, and that's what happens. So that at the end of the day, you'll have to file a return with all, with the taxes, of course, and everything else. But what it requires that is just to withhold today, then it means within 5 working days, you need to remit that amount. So, and I understand your challenge because it means now every day you'll have to be withholding and paying, which means for today, by next week, Thursday, Friday, you should have paid like that. So it's likely to be almost every other day. And that's what you're asking. And I think with the law, it basically means you will be now withholding and paying at every other day, depending on how your operations works. Is that agreeable, Stephen? Or is that clear?
That's okay. That's okay.
Yeah.
Thank you so much. We are about to close down the window for asking questions, but let me pick. I saw a hand that has been up for quite a long time. Apart from Stephen, let me see who else. Joy is here. Her hand is up. Joy?
Yes, thank you so much. I'm calling from Nairobi.
Yes, Joy.
I have a challenge with the filing of housing levy. I had not done it with our July pay, paying our staff. So it had already been filed. So if I have to do the July and August, am I going to be penalized? Or in between, if I do it between now and August, end of August, what will happen to the institute or to the employer? I will wish to know if I can combine the two. I file by end of August. Is it okay that way?
Leonard, Chester, I don't know whether you can respond to that, and then I will give an opportunity to one of us who is from the filing office to give clarity on all questions to do with filing and the amendment. But those that want to combine housing levy for July and August and pay them in August, maybe just comment on that.
Yes, because now you remember those are two different months. And
Yes.
the way the law has been put in, basically it says for July, you need to pay by today, for example. Then even if you file in end of August and pay for July and August, that it means basically that you will incur a 2% penalty on the amount that belongs to July. Because that's what the law says. You have delayed paying the amount within the due date for July. specifically. Juliet, is that
Joy?
Joy, sorry, Joy. Joy basically is like you are looking at it separately. You are looking at each month as separate. But even if you file at the end of the month, it basically means you have to be penalized for July. But for August, it will be fine. But for July, you'll have to be penalized as per the law. Or the organization will have to be penalized but not the employees. It's the employer, because the obligations has been put on the employer. Remember that this is the obligation has been put on the employer, that the employer must deduct and pay. But the employee, basically, your salary is paid by the employer. Even PAYE, if the employer does not deduct your PAYE, then you are not the one who is going to suffer. The one that will suffer is the employer, because the employer failed to deduct, and they will suffer a penalty. And that amount can also be recovered from the employer on your behalf as an employee.
I think the question is clear. I think Joy has her microphone on mute, and I think the response, Joy.
Thank you so much. The part that was not clear but now is clear, the interns. Maybe if my intern is just earning 10,000, do I need to put levy on the 10K and the 12, 15 interns?
Yes. You have to put a 1.5%.
All right.
Because
Joy,
there's no exclusion. There's no exclusion.
Okay.
Thank you so much, Joy, for that. Eliud is here now. I want to welcome questions to do with filing and amendment. Now, if you have a question to do with the filing and amendment, just indicate on the chat box that your question is on filing and amendment, because I want to welcome Mr. Benson, who is here with us to answer that question. But Eliud, you should be able to ask your question now.
Good afternoon.
Good afternoon to you too. We can hear you clearly. Where are you asking the question from?
I'm asking the question from Kiambu. I'm at Kiambu. So my question is about the digital services, the importation and so on. How can you claim input tax? Maybe you are buying, maybe you are paying for like a domain from Google. Can you be able to claim that input tax from that invoice? I've been trying to do that and it doesn't work. Thank you.
Okay, Chesaram, I think you are here. Sorry about that. I think you should now be able to unmute.
Sorry, I didn't get most part of the question.
I think the question has been responded to. It's Raphael who's asked the question.
Filing an amendment, something like that.
Yes, perhaps, Leonard, let me just give Benson an opportunity. I've seen a response on the chat box by Benson from our Business Transformation Office. Perhaps he'll be in a better position to respond. Benson, I think you have an opportunity to speak now.
Hi, Brenda. Let me start with Kenneth Munyaka. And I think
thank you so much.
He addressed an issue to do with why the P10 is calculating the housing levy based on basic pay and not gross pay. I want to clarify to Ken that it is actually using gross pay. Remember, we had housing levy sometimes back, and we did the enhancement that time when it was brought to us, but taxpayers were to contribute on a voluntary basis, and I think that time it was based on basic pay. So we maintained that field for basic pay, but we are going to do away with it. But even if you capture something there in the current return, it will still calculate housing levy on the gross pay, because we also have that field for gross pay. Then there was another question from Raphael, which I had posted on the chat. The withholding VAT template is not accepting different dates. So what we've done is that we have enhanced it as per the Finance Act 2023. We're just trying to comply with the Finance Act 2023. So withholding VAT agents will be required to find a date within which they will pay. If you are paying suppliers, if you have gotten supplies like for this week, let's say from Monday, you as a taxpayer to avoid doing so many payments, you can plan that if I've gotten supplies on Monday, Tuesday, Wednesday, you make them on Friday. You pay your suppliers on Friday, and then that is the date you give us in the return. But it will accept different invoice dates. But that's something we are working on. We noted there was a bug in it, but we are working on it. It should be ready by Monday. We should have an updated withholding VAT template that will allow you to capture different invoice dates from your suppliers. But for the payment, you will have to capture the same day for all the transactions. So it is now to encourage our taxpayers to plan well so that you can decide I'll be paying on Thursday or I'll be paying on Friday and so on and so forth. As we find a better way maybe in future of how to implement the same. Remember the Finance Act has been contested, so we had very limited time to implement some of these changes, but we'll continue improving as time goes by.
All right, thank you, Benson.
I don't think there is another question on.
There are two questions.
There was another one on. There was another one on amendment.
Yes, that one is very key.
Yes.
Please
So
just
when you
talk
are
about
filing,
amending.
when you're filing an amended return, sometimes back we enhance the system such that you're required to upload documents, whether you're amending downwards or you're amending upwards. So the document you need to upload is just a simple document based on what you've changed. If your payroll has changed, maybe you had omitted some employees, or you have declared some employees maybe who retired or left the organization, and your pay is going down, or maybe even for it's actually mainly on pay, but because housing levy is tied to pay as you earn return, then anytime you're making a change in the pay as you earn return, whichever change you're making, then you'll be required to upload some document, a simple document just to say this is what I've changed. So if it is a downward amendment, it will come to us for approval, and we'll look at the document that you have uploaded. If it is an upward amendment, it will not come to us for approval, but we may want to look at the document that you uploaded, or so that we just know what you are changing. So I think it's just that. So
and the document, maybe just give clarity. There are people who are asking if it is just housing levy, they filed without declaring housing levy, but now they want to include it. What documents should they attach?
Yes, what they need to attach is they can just say that they can just do a letter and maybe a schedule of the Excel schedule of the housing levy details that they not included, and that is what they will upload. So that if somebody wanted to look at the return, they will know that this taxpayer was just amending to include housing levy. As simple as that.
Thank you. And then please talk about those that are filing for branches. I've seen a couple of questions for those declaring housing levy as a branch.
Yeah, we've noted some challenges for taxpayers. Being the first time we're implementing it, we have a few teething problems. Taxpayers who have amended are having challenges in making payments. Taxpayers who are having branches, they're also having challenges making payments. And we have also seen other unique scenarios whereby a taxpayer actually declares housing levy, but when to go to pay to make a payment, then they're not able to generate a payment. Actually, as we speak, I'm in a focused session with our technical teams, and those are the issues we're actually addressing. So within next week, we should be able to address most of the issues that are making it to make this process very seamless for branches and even those who are amending downwards and upwards and so on and so forth for housing levy.
Thank you so much, Benson. We appreciate your feedback on this. I think we've captured as much questions as we could in terms of those who had wanted to make the amendment. We had every intentions of finishing this session now. I think Josephine Lucasa, the question of filing an amendment has been responded to. I just want to welcome, I've seen a number of questions. Susan, Lydia Momanyi, Unita, Marion. I will, because we want to bring this session to a closer, we might not be able to continue much further than we have, but I want to give an opportunity in very quick succession. Susan, Lydia, Unita, and Marion and Nathan, ask your question, make it very brief, and then we'll respond to it as one and close the session. So we begin with you, Susan, very, very quickly. Just make it very brief. Susan? Okay, Susan, that's our last call. All right, let's proceed. Let's move on to Lydia very quickly. I've given you the opportunity to ask your question. Lydia Momanyi. All right, I don't know whether they've left the session, but it's fine. Let me move on to Unita. Unita, one last opportunity to ask your question very quickly.
Okay, I had it on the chat. We were filing, as we were filing withholding tax, we used the invoice date instead of payment date. So it has attracted a penalty. Is it possible for us to amend that or correct it?
Right, thank you very much. Benson, I think these are pay filers. VAT filers. You want to respond to that?
Yes, maybe I didn't get it correctly, but maybe I had something to do with invoice date captured as invoice date captured as payment date. So if they have not paid, they can amend, they can cancel that withholding tax payment and then generate another one afresh. That is if they have not paid. If they have paid, the only way is to cancel the certificate that will be issued to the withholdees. They get a voucher and then they make the correct payment using the correct details.
Thank you very much. I think, Unita, your question is okay.
Brenda, I think there is someone who is saying you have not seen their hand called Juliet. Maybe you can address that.
But Juliet came in later. We need to close the session. I had given priority to those that had lifted their hands first. Okay. Okay, Juliet, you're the last person and the last person in Nathan. I'm not able to take more questions up from here because we need to bring this to a close. Proceed.
Hi, I hope you can hear me.
Loud and clear, Juliet.
Okay, actually I was there from the beginning. I just had a technical difficulty and came back in.
It's okay. It's fine.
Thank you.
Proceed.
So I had got two questions. One on withholding tax on rental income. The rental income we do file at the 10%. So are we going to have two taxes, the 10% and the 16% withholding tax? Or I probably didn't understand that particular part, or I don't know how I got it. The other thing would be that when we are filing the housing levy, July and August put together, what amounts are we going to put? If it's on the gross salary, how will it just calculate by itself, or we will have to put 2 P10s or amend twice? Just the process of filing housing levy July and August combined.
Thank you, Benson, especially on the housing levy bit.
Yeah, I'll take on the housing levy bit. I think the other one is for Jesrem. I don't know. So for filing,
will take the other question.
So for filing, there are two ways to do it. You can amend the July return. You capture the levy for July, and then now you do for August. You do it in August, and that is what we maybe would advise. That is the best way. That's actually the legal way of doing it. I know all of us were caught up in the Finance Act dispute, but now that we were told to proceed, the best way will be to actually amend. You amend the July pay return if you're filed. There is a specific sheet in the return where you declare housing levy separate from where you declare pay as you earn deductions. So it's good to amend the July return and then you file August and also declare housing levy for the month of August.
All right, thank you very much for that. I think, Juliet, you should be okay with that response. I just want to bring in Leonard to respond to your question on withholding. Talking about 10%, 16%, but I know she's talking about MRI. Leonard, did you get her question?
Yes. Juliet is asking about withholding on rent at 10%, and then there is something on 16%. What I wanted to just clarify is that those are two tax heads, and one is VAT, the other one is income tax. And for income tax purposes, what the law is dealing with is dealing on rent at 10%. Of course, the rate will change in January to 7.5%. And for the other one is on VAT, where we're talking about commercial rent, where you are appointed as an agent. And also for income tax, also we will be having an appointment also for agents as well. So which means that if we will have also to look at to ensure that there is no double appointment for the same property, to avoid also the conflict. But I hope, Juliet, you understand that these are two different taxes that we're dealing with.
Yes, I get it now. I actually thought it was like a double taxation or what, but I get it now.
No. The other one is on rental, which is VAT, on commercial rent. Then the other one we're dealing with on income tax. So they're two different.
Thank you.
Okay.
Thank you. I
do get it. Thank you.
Thank you. I did mention that we are picking the last two questions for people who had raised their hands much earlier, and that is only Nathan and Marion. I'm sorry, Susan, we might not be able to pick your question. Nathan, I had given you the opportunity to unmute.
Okay, thank you. Mine is a quick one.
Yes, where are you from?
Amended from Nairobi.
Yes.
So the Finance Act amended Section 23 of the Tax Procedures Act by introducing a requirement to have an electronic tax invoice. So my quick question is, does it mean now everyone will be required, every taxpayer, despite whether you're registered for VAT or not, to be required to register for TIMS so that you can issue invoices that are TIMS compliant? Because now from first, you cannot claim expenses that are not TIMS compliant. Maybe just a clarification on that.
I think Chesram can say something on that, or Christine Majani, both of you have liberty to respond.
Okay, thanks. I'll take that. So yes, the Tax Procedures Act has been amended to, to anchor eTIMS into the act. So yes, this means that where we are headed, since all invoices have to be raised through eTIMS, so both registered and unregistered suppliers might have to actually, use eTIMS.
That is very clear. Thank you very much, Christine, for that. I think we've exhausted the questions. Marion, try to give you an opportunity to, yes, please. Okay, yes, thank you. Please unmute.
Wanted to inquire, the one for withholding tax, you said it's within 5 days. So is it from the date that you say we pay, like today on Thursday? Does it count from Thursday, or does it start counting from Friday, like the 5 days? Also, there was one on VAT. For the suppliers who are on the VAT special table, when we are claiming VAT, input VAT, we're not able to claim the amount. So what happens to the amount that the amount actually is vatable, but we can't claim from our end, yet we've already paid the supplier the 114%.
Right, I think we have Christine to respond to that because we are finishing.
I'll answer the one on withholding tax first. So she was asking the 5 days, the 5 working days is from when? So it is from the day you deducted. So you deducted you deducted withholding tax from a payment you are making on, say, on Monday. Then you should pay that within 5 working days after you deduct. So start counting from Tuesday, I believe. Yes. Then I didn't quite get the question on the second question. Just repeat. VAT special table.
I think I'll give an opportunity for Benson to respond to the VAT special table because it is a question that has to do with filing. Benson?
Okay, thanks.
Yeah, I think for VAT special table, the lady who just asked the
Her
question,
name is Marion.
let
Yes.
the supplier come to us and remove them from the special table. We just want to confirm that. Yes, Marion, sorry, I didn't get the not the supplier just as because I know
We are losing you, Benson. Maybe you can come again with the response. I don't know whether you can adjust your audio. Benson? Sorry. I think
so that
your connectivity, yes. Hello, Benson, I'm sorry to cut you short, but perhaps you might want to take the answer again. We were not able to hear you.
Can you hear me now?
Yes, now we can hear you. Yes, we can hear you.
I was saying that to Marion, because this person is a supplier and they want to continue doing business with you, just advise them to come to us, give us the invoices to show that they're trading, and we'll remove them from the special table so that you claim your input as early as possible before the lapse of the 6 months.
Marion, I think that's okay. Your question is answered. Marion?
Not entirely, because most of the times we encounter one-time customers. So if the supply was only for like once, like how will we be able to now claim the inputs? And like we can only find out about the special table once we are filing. So it's hard to now go and tell the supplier to go and sort their issues, then we claim.
I think Benson did mention something about that in terms of the duration of time that you have to claim input VAT. Benson, I've unmuted you. And maybe also Christine, wherever you are.
Yeah, we receive these requests. Sometimes we even receive them from the person who has actually procured the goods. So even Marion can herself, like she can also give us those cases. Then we look for those taxpayers, even if they are one time, because they have charged you VAT. We can look for them and force them to pay that VAT. We remove them from the special table. We allow you to claim. Then we take them back to the special table.
From our end, one last thing. So can we get maybe a credit for the ones that we've not been able to claim for that period, so that it can reduce our payable position?
Yes, you give us the details. We look for the taxpayer. We look for them. We can deactivate them so that you can claim your input. As we look for them to force them to declare the VAT that they have charged you.
And can we also maybe get a list of the ones on the special table so that when we are paying, we can be able to now like screen them out before payment?
No, we cannot share because of confidentiality. But what we can do, Marion, to help you is, for me, what I would think is, I don't know whether how frequent you get one-time suppliers, but if you have some suppliers that are frequently trading with you, we can always, because you have their details, before you make payment, before you pay them now their money, you can always confirm with us. We can confirm for you whether that transfer is actually in the special table, so that if they're in the special table, you tell them to come and sort their issues first before you give them their payment.
For us, it's quite challenging because we normally deal with more than 1,000 suppliers in a month. So it's hard to know like which particular supplier is now on that special table, which one has been removed. So the screening time is quite challenging. Okay.
What we will do, Christine, allow me to interject. We can pick your contacts and pick out the conversation after the sensitization. Christine, is that okay? Please, Marion, sorry, kindly share your contact details on our chat box. Inbox you can inbox me and then we will pick out this conversation out of the sensitization. Fair enough?
Okay.
Thank you. Thank you so much. Now I want to welcome both. We're not able to pick any other question. I'm sorry, Abuta and the rest who are raising their hands now. That's it for today. But remember, we have sensitizations every Thursday from 11. That is our tax Thursdays. And then when we organize other sensitizations apart from Thursdays, we will be informing you. And you can also check out our posters and our social media pages. I want to welcome very quickly Christine and then followed by Benson to make their closing remarks. Remember, Christine Majani is coming to us from the corporate policy unit that is under domestic taxes, and she's going to give us her closing remarks. Also, on behalf of Leonard Cheserem, who was here with us, but has had to attend to other engagements. Christine?
Thank you, Brenda. Thank you all for taking your time to tune into this session and for listening to us. We are open to any questions regarding the changes to the revenue laws brought about by the Finance Act 2023. I wish you all a blessed day. Thank you.
Thank you so much, Maja. Let's appreciate Christine wherever you are. I know she's done very well in responding to our questions and also taking us through part of the sensitization. Let's give her a hand clap, round of applause, and just appreciate her and thank her for her input. Thank you so much. I see the hand claps coming in. Christine, those are for you. Thank you. Together with Chester and pass our regards to him. Even as they appreciate you, I want to welcome Benson also. If you have anything that you would want to mention at this point regarding return filing, and also give us your closing remarks.
Yeah, thank you. And I've seen the last question as I give my remarks. So Nancy, please use the registration date. If you already paid before filing PAYE return, just use the date you generated the payment slip and not the date you deposited the money to the bank. Just use the registration date and you'll be okay. So much is Brenda will continue engaging. We are making further changes occasioned by the Finance Act laws, and we are also working 24 hours to close on any issues that arise. So I think I would encourage the members or the taxpayers to continue joining these sessions because there are changes that we're currently doing so that we can keep them updated on what has changed and what they need to do to comply. Thank you.
Thank you so much. I want to now take this opportunity to just ask us to continue sending in your areas of interest, the kind of questions that you have. We have sensitizations coming to us every Thursday, so stay tuned. We'll give a special focus on the Finance Act and even return filing, even as we are headed to 20th of this month. Remember, we know that you're supposed to file your VAT returns, monthly rental income returns, turnover tax returns, excise duty, and also even withholding taxes. So we have a lot coming for you, especially if you are concerned with any of the tax heads that I've just mentioned. Thursday will be a special day for you. This session is available on live stream on the link that we've shared. Sorry, because I understand there's a link that was a bit different that had been shared, but an updated link has been posted for you just now. So kindly check it out. This is Kenya Revenue Authority. It's called KRA TV on Facebook, Facebook, yes, KRA TV on YouTube, and we have KRA TV on our KRA website, which is our system-based television. So that's it. My name is Brenda Mutai from Tax Education. Thank you for the sensitization to you. I think just hold on a minute. I'm getting something from our technical team. Oh, yes, we have followers who are here with us online. I cannot fail to acknowledge you. I think the likes of, let me just get your names very quickly. Joyce is saying, okay, let me just read through. Thank you. Joyce is saying, please give us more engagements. I think I've mentioned the sensitizations are on every Thursday without fail. I see the likes of Janet Otwabe saying, thank you for the session. Mary saying, thank you, very insightful session. You can put in your comments how the session was for you. Christine is saying, great sessions. Thank you very much. Wilson Mwangi, thank you for the good presentation. I appreciate. Thank you, Samuel. Thank you very much, saying that it was a very clear presentation, especially on the Finance Act. I can tell you, time sometimes is just or a challenge in terms of exhaustively dealing with the issues, but we have a team that's coming to us on Thursday to tackle Finance Act, especially under VAT, TOT, and MRI. So please join us then. I think from me, any further questions can be channeled through our call center. The details are. Isaac is asking, you didn't answer me the question in terms of writing the check. Benson, I know you are still here with us. This is those who want to make payment. And I saw the same question on Tuesday. Who do they address the check to? Those that want to make payment. Benson? I don't know whether Benson is with us or whether he's left. In terms of who to address the check to. All right, Elizabeth Ndegwa, thank you very much. You're saying thank you for that session. It's been insightful, especially for the gray area. For those asking about who to address the check to, in our previous sensitization, just go to search for KRA TV on YouTube, and then look for sensitization we did on Tuesday. Tuesday was when? 8th of August. The question as to whom to address the check to was answered very clearly there, so you can refer to that. That's it. It's 1 p.m. I want to ask one of us to pray for us. The hand that will be raised will be the person who's praying for us. Who will do the prayers? Thank you. Samuel is saying that he did his to the Commissioner of DTD. You will get that clarity in our previous engagement. So let me get a volunteer, someone to close for us with prayer. You can raise your hands. I will see you, and I'll give you an opportunity to pray. A hand raised. Okay, I think all you have, Joyce, thank you very much. You're appreciating us and our team. Thank you. Let me just give the prayer then. Heavenly Father, we thank you for the session that we have had, for the clarity that we were able to give, for the things that we were able to learn. We appreciate you. Even as we are ending this session, I pray that our taxpayers will find the information that we give useful, and even as they seek to comply in terms of payment of taxes, may you help them in their endeavors and their businesses. And we appreciate all this in Jesus' name. Amen. All right. Thank you and have a good afternoon. Remember to like and subscribe to our pages, just as our team is posting that on the chat box. You should be able to get through, and also share the link. Thank you.